All right, let me set the scenario here. You're ready to get started investing in stocks. You find this wonderful ticker on this news article said there's this penny stock that's about to take off and explode. So you take your savings, you have $5,000 saved up, you dump them all into that stock and you buy 50,000 shares of this stock, right? And it is ready to explode. You're going to make millions of dollars in the stock market according to this article, right? No, of course not. That's not how it works. Hey guys, Michael here bringing you a brand new video. This one's going to be around stock investing and how to get started in stocks if you know nothing about them. So just to kind of provide a little back history, stocks are really a great way to invest. I think if you look at the history of the United States, you're going to see that stocks were the king. They are the best way to make a lot of money without much effort, really. Nowadays we can trade on financial platforms such as TD Ameritrade, E-Trade, Schwab, etc. Right? All these different exchanges, right? And all these different banks you can invest with, and you can buy your own stocks, and you can sell. You can do all your own trades. There's small commissions that are charged on each trade by these companies, but in general, you can do everything that you need to do on your own. You don't need to go to an investment banker anymore. You don't need to have a stockbroker. You can do all this on your own. So in the beginning of the video, when I was kind of staging that example, I kind of did that as a joke, but at the same time, I have done that myself. So when I graduated college, I had a few $100s that I had in a stock account, and this was about $500, and I basically Googled the best penny stocks to buy right now. And of course, I found these articles around these stocks. They were just amazing. They're ready to break out. You're ready to make, thousands of percent on top of your investment once they actually start doubling up, right? Because it's a penny. It can only go to zero. It can only lose 1 cent, but it can gain infinity, right? Well, breaking down the math, breaking down the probabilities of any penny stocks actually coming back and becoming fruitful investments is essentially like winning the lottery. So I did all that, and of course I forgot about those accounts. I was like, you know what, I'm just going to buy these stocks and I'm going to forget about them. I checked them, a couple years ago, and of course they're all at zero. So no shock there. But anyway, when you're trying to get into stocks, I would say the first step I would do is obviously open up an account with one of the major online brokerage firms. I personally use TD Ameritrade. I love the Thinkorswim platform, if you guys have ever heard of that before. The Thinkorswim platform is one of the top trading platforms. It allows you to put in very good custom order. It has lots of technical information and charts. And then TD Ameritrade themselves has a lot of access to fundamental reports and things that can help you when you're doing your research on individual companies. When you're getting into stocks, you're going to open up one of those accounts. In my opinion, the best way to get started, if you don't already have an IRA opened up, is to either open a Roth or a standard IRA that you can put up to, I believe it's $5,500 a year, into one of those accounts. So the reason I say that I like the IRA is when you get into stocks, you're really going to want to have a very long-term approach. You're thinking 10 years or longer, that when I buy this stock or shares of this company or ETF or whatever, that I'm going to hold that for 10 years. I'm not going to buy and sell and buy and sell. So having that IRA, first of all, you have tax advantages that come with those, either in the form of tax deductible contributions, or if you make a sale on a stock in an IRA, you are not taxed on those until you take out that money later down the road. So I would open up an IRA. If you don't want to open up an IRA or you already have one, you can open up a standard brokerage account, which is just basically like a money market account that you have access to purchase and sell shares of stocks on common exchanges that can get you into those markets and those areas where you can purchase them. If you're going to go the IRA route, I would start to put aside money every month, and I would try to put monthly amounts of money into that account. So don't just dump everything in there and forget about it. You're going to want to put monthly amounts. Say you budget $300 a month that you can put into an IRA account. Okay, and then what you're going to do is that money builds into that account. You're going to purchase on regular increments. You're going to purchase shares of stock or shares of ETFs into that account. So the best way to think about it is, instead of just taking $5,000 and depositing it in an IRA and then purchasing Apple stock, $5,000 of Apple stock, and then just buying and holding and forget about it, what you want to do is get in the habit of depositing monthly amounts, because that's actually a really big contributor to how your stock grows or how your investment grows. And then you also want to have price averaging. So price averaging, the reason I always talk about price averaging is if you look at the S&P 500 back through its history, and the stock market back through the history in the United States, for example, it just grows consistently, steadily, on average about 6% per year. So the idea is if you bought all your shares of stock at the high of, 2007, and then you sold them all in panic in 2009, and then you've got nothing left, or you had much reduced amounts compared to what you would have had, you would be net negative versus just incrementally. Let's say you buy $300 at the peak, and then you just keep buying $300 worth of stock every time you get that money in the account, say monthly. And then you're price averaging. So you're going to buy it as it goes down, as the stock market recovered in the end of 2009 and 2010, and all the way now into 2017, 2018 at a much higher level than it was before. You're basically price averaging, and you're getting the returns of the S&P. So bringing that point into play here, my recommendation is if you're first starting off in the stock market, or if you are not knowledgeable of stocks and the fundamentals that come with them, I would recommend investing in what are called exchange traded funds, or ETFs. ETFs are really good at getting a broader scope of the market. It's essentially mimicking a mutual fund, or what mutual funds used to be. So for example, the most popular and the highest one I would recommend to get started investing in is the SPY, or that is basically the ETF that mimics the performance of the S&P 500. It also, I recommend it because with ETFs, you do have expense ratios, you have annual fees. The annual fees on that ETF are very low. I believe they're 0.09%. So every year you're going to pay 0.09% of the amount that you have invested in that fund as a fee to whoever runs that ETF. So the idea is, though, you can basically invest and you are removed from all the volatility of individual stocks. There could be a bankruptcy in the S&P 500, and it eliminates all of that risk to you, and you have a much broader scope. It doesn't mean you're going to get rich quickly, and that's not what we're here to do, but you will grow with the stock market over time. Okay, and if you want to pick individual stocks, I recommend sticking with sectors that you know. Let's say in your job, or that you have knowledge in. For example, I work in retail. So my job is in warehousing, but I work for a retail company. So I have a great knowledge of the retail market. I am invested in some retail stocks and have been able to follow them through the ups and downs of 2017 and 18. But for example, I don't work in the materials business. I don't know necessarily about steel. I don't know about certain ore mining companies around the world, right? So I'm not as inclined to invest in stocks like that, because I don't know necessarily how those companies make their money or how devastating certain reports are on them. So like I said, if you are going to buy stocks, individual stocks, I would stick with sectors that you know through your own job, or that, just some trade information that you know. But the biggest thing I would consider is, if you're going to go into the ETF world, is just buy at regular intervals, so you price average your purchases. The key is you want to keep the commissions low enough when you buy those that you don't incur above 2%, because 2% is kind of the standard broker fee. So for example, TD Ameritrade, they charge $7 per trade. So what I need to do is, whenever I do purchase into another stock or to an ETF, I need to make sure that when I purchase it, I don't buy such a small amount that commission of $7 is higher than 2% on what I'm putting in. So for example, if I bought every time I had $1,000 in that account, I would buy that into the S&P. That's a 0.7% interest rate, or 0.7% fee onto that purchase. So the idea behind that is I'm not losing on a higher commission rate than I would if I just worked with a standard stockbroker. So you don't want to just put every $100 into that account, and $100 you buy more, $100 you buy more, and $100, because then you're going to eat more commissions. What you do is you just set it across certain intervals, how many months it is, and what your savings rate is to invest in the stock market. So there you guys have it. ETFs is my recommendation. I would definitely stick with the SPY. You are more than welcome to check out all the other, there's tons of ETFs. Look at the expense ratios, look at the fees you'll be paying. You can buy ETFs for just about anything. The one thing I would definitely not recommend is buying ETFs that short the market, so don't get into SDS or any ETFs that are basically negative the market. You're betting against a huge trend line that points up, so to bet against that, you'd have to follow that market into a very small window where it's actually a bear market or going down to profit on any of that. So individual stocks, I recommend if it is a sector that you are familiar with, preferably also larger cap stocks that are more stable, that have a historical track record. More than welcome to buy into those stocks. But for now, I would say if you are new to the stock market, invest in ETFs, open an account with TD Ameritrade, Schwab, any E-Trade, any of those online brokerage firms is a great way to get started. I recommend TD Ameritrade. That's who I use. But guys, go ahead and get started. If you haven't started, it's not too late. And then, enjoy the fun of investing. Do a lot of homework, do a lot of research on it. Learn more about it, guys. And until next time, I'll see you in the next video.